Welcome to Wealth Coffee Chats, folks, for your daily live updates. Get the most out of today's episode by participating in the chat. Make sure you ask some questions, be part of the conversation, have a bit of fun, grab a coffee or a tea, take some notes, and get ready to start your day, folks. Quick few housekeeping rules, though. No spamming, no advertising or self-promotion in the chat. That's not on. Be kind and respectful to everyone when participating. And most of all, have a good time. Real estate investing can be your biggest asset. It also can be your most expensive asset when it comes to getting it right or getting it wrong, folks. It can be time-consuming, stressful, and that's why here at Positive, we have what's called a 6-star team, a full-service team that provides integrated wealth and property investing solutions and services simply designed to help you progress towards your goal of passive income through your property portfolio, folks. Make sure you check out our other podcasts on the Positive Mentor Network. Not only is there Wealth Coffee Chats, there's the Urban Property Investor. Drops every Wednesday with straight talking investing strategies and lessons with Sam Saggers. Property Investor Tales. This is where our clients, you guys, share real life stories from property investing, hosted by some of our advisors and strategists. And that's done every fortnight, dropping every Monday. Wealth, Wine and Wisdom, folks, that debriefs the week that was in the world of finance and property, hosted by yours truly, Jason Witten and Andy Fenton on Fridays. Hey, good morning, folks.
Good morning, everybody. Welcome to another Wealth Coffee Chat.
Hope you're well, folks, wherever you are.
There it is, team. Morning. Morning, wherever you're tuning in from today.
Early bird gets the worm, they say. Here at Positive, we offer a 6-star team. It's a team that help you at every stage of your wealth creation journey.
General advice disclaimer. The information provided is general in nature and does not take into account your personal objectives, financial situation, or needs. Before acting on any information, you should consider whether it is appropriate for your circumstances and seek professional advice from a licensed financial advisor. While every effort has been made to ensure the accuracy of the information, it is not guaranteed. It is based on our understanding of regulations and laws as at the publication date. As these are subject to change, you should talk to a professional advisor for the most up-to-date information. Any examples or illustrations provided are for illustrative purposes only and are not a guarantee of future performance. We do not accept any liability for any loss or damage incurred by reliance on the information provided. Any opinions expressed are subject to change without notice. Past performance is not indicative of future results, and all investments carry risks. Neither the hosts, guests, nor any affiliated entities accept liability for any loss or damage arising from reliance on the information provided. By listening to this podcast and viewing this presentation, you acknowledge and agree to these terms.
Morning, everyone. Thank you for jumping on to another episode of Wealth Coffee Chats with myself, Alex, from the financial planning team. Apologies for my voice. Been a little bit sick, the whole family and I, the last week. So just coming out of the trenches, and the voice is a little bit rough. So look, guys, today's episode couldn't come at any better time, given the last episode about the RBA decision on interest rates, and what we've seen this week is the announcement of the CPI rates, right? So interesting numbers, right? So if we look at the details, the inflation for the last month or the last 30 days has come way above the expectation, right? So the expectation was about 2.3%, and the numbers came in at 2.8%. Right, so which has kind of, I think, made the news. I think I've seen it everywhere. Doom and gloom and whatnot. It's still within the band target of 2 to 3%. Right, so don't stress about that. However, what's important is, which is what we're going to dive into in a second, is just a couple of numbers behind it. Right, so you've been given the the lights and the flashlights, everything. So amazing, great. But let's just break that down and have a look at what is actually making the change there. I think there's a few people jumping on. Thank you for jumping on, Jeff. Good morning. Good morning, Pat. How are you, mate? I will get back to you, Pat. I've got your emails. So yeah, like I said, been unwell the last week, but I'll be coming back to you shortly. Morning, Chris. Yes, instead of coffee, I've got a glass of water here, or cup of water. Morning, Pat. Again, yep. Jeff, inflation up now. Yep, that's right. So look, I said this last week, and you got to be silly if you think that the inflation is sitting at low rates and whatnot. So you could go down to your local supermarket and you can see the prices going through the roof. So you even look at things like daily things like a cup of coffee. 12 months ago, probably $4.50. Now it's $5.50, right? Like I said last week, there's other influences behind it, but all of these things do kind of make an impact. Morning, Tim. Will CPI put rates on hold? Look, the reality is the conversation has been that the rates should continue to drop, right? So my expectation, and I don't make any decisions in this regard. I think it'll probably stay on hold. The likelihood of a drop will probably, for the rest of the year, will likely be 0. So the rate where we are now will likely have to wait and see what happens. But if you think about what is happening, you look at the numbers behind it, and they're kind of saying that the electricity rebate that everyone was getting at the start of the year, that is now coming to an end, which means that and that's I guess part of the group of items that form the CPI numbers. In fact, what I'll do is, Ethan, if you could just drop me into my screen, please. Yep, awesome. So I think the best way to sort of take you through this, guys, is look at the ABS details and stats. So this is all available to everyone. You can jump on and have a read through yourself, but something that we'll look at on a quarterly basis, just to sort of get an idea as to where things are at. So if you scroll down to the expenditure weight update 2025, this is a couple of months old, but it's still a really good sort of indicator. So look, they do say that this is not an average household numbers, but they do take some arbitrary numbers in there. But look, regardless of all of this, right? So what's important here is just looking at the changes and where things are being spent. So essentially, they've got different groups which they get data for, and then that kind of determines the inflation numbers, right? So if you look at them, what are they? Food and non-alcoholic beverages, alcohol and tobacco, blah blah blah. So you go through all of this stuff here. So if you look at what actually makes the biggest impact in this, well, food and non-alcoholic beverages. So we know that the prices of everyday sort of bread, milk, etc., has gone up significantly, and you can sort of see that from pre-2019 to now. There's about a 2% difference in the household expenditure, which means that in simple terms, an extra 2% of your earnings are going towards your grocery bills, which is in fact probably on the lower end. I would say it's probably like another 10% in reality that you're spending on your groceries, if not more. Then you look at housing. So housing is everything around rent, bills, so utility bills, that is. Right. So again, you can see that this has, over from 2019 to now, it's saying that it's dropped by about 1%. However, if you think about all of the rebates and everything that were provided, I expect that this number is going to change moving forward. So, and we did know this, that the electricity bills, which is probably the biggest expenditure on the utilities bill, that was subsidized for a little while now, but that's coming to an end. What else is there? Transport, sort of 1% uplift there. Recreation and culture, kind of virtually neutral. So if you look at all of this and you break it down, and I did mention it to you guys a few weeks ago that the reporting season, which is currently underway and due to finish any day now, is a great indicator for you to actually front run these numbers, right? So I'll give you a perfect example. So let's focus on something that people can relate to some degree. So let's look at alcohol, right? So everybody likes a glass of wine or a beer on the Friday, or on the weekend, the barbecue. So great. So where do you normally go? You go to Dan Murphy's, right? Dan Murphy's is probably 9 out of 10 times you'll end up there to get your glass of wine or your slab of beer. So they just so Dan Murphy's is owned by Endeavour Group, right? So they just reported this week. So Endeavour Group, they do other things, but Dan Murphy's is one of the biggest sort of allocations within their portfolio. So during COVID, they did really, really well because everybody was at home, and alcohol was kind of like the main thing. But now, if you look back the last sort of 12 to 18 months, there's a bit of a shift. There's more people wanting to go for a run. There's more people are wanting to go to the gym. So, and with everything going up in price, so if you go to the pub or anything, a schooner of beer has gone up from say $8 to say $12 or $13, right? So people are now choosing to kind of, instead of going out, they're staying home, and potentially, instead of drinking, they might go and exercise. So a good indicator from the Endeavour Group results is that they are, so just looking at my figures here, so their revenue is down, right? So look, their revenue for the year was 12 billion, right? So again, not a small number, but it's down by 0.3%. So in nominal terms, you could say that that's basically neutral for the 12 months. So from a share perspective, it's not a good indicator because typically investors want to see uplift in revenue and business activity. So where this kind of has an impact is that if you're a holder in that particular stock, your dividends, right? So dividends that we speak about quite often, which is basically your interest from the shareholding, is down, right? It's down 16%. So it's down from 6.3 cents per share. It's down from 7.5% per share to 6.3%, which is, let's just say 1.2%, 1.2 cents per share down, which is about 16%. So you look at that and you're like, all right, well, what's the indicator? So if you look through their report, which typically goes for about 100 pages, but there's a lot of different outlets to kind of summarize all the key things, and they are saying that it's really all about consumption has. I was going to say dried up, but the consumption has reduced in terms of alcohol purchases. So, which is not a good indicator. And you can see that in the share price, right? The share price is down 25% in the last 12 months. So if you remember, when you look at the share holding, you're kind of trying to forecast where it might be in the next, 6 to 12 months. So that would be, an indicator where that particular company is going. So, and you can break that down. So the point here is, right, so if you kind of thought, what, don't worry about Endeavour Group, I don't care about it. Reality is you probably do invest into it through your super somehow. But the point here is that you can go through all of these individual groups, right? And they are most likely to be sitting on the ASX. And then, transport, you've got Transurban, right? So Transurban is the big player there. So You can have obviously it's not just Transurban in this, but there's other factors. But you can go and have a look through their reporting and kind of get an indication of where they think the market or what their forecast is for their company, which will then translate into these figures here. So again, if you've got spare 5-10 minutes in the morning, you read your newspaper or news articles, jump onto the ABS. They've got heaps and heaps of information there, and you could kind of have a look at the latest topics in regards to it, and have a look at, what does that, think about what does that might do for me in my sort of in my strategy, right? So the strategy for you might be property, might be something else. So we know with property, again, the changes to the first home buyers is coming in a little bit sooner. So it was supposed to start in Jan. It's starting in October, I believe. So I'm sure the other guys would have covered off on that, which means that, essentially the entry point into the housing market is widening. So there's more people that can enter. So if you think about it, what does that do to my portfolio? Well, there's likely to be more demand whilst the supply is still low. So that might potentially increase the prices on my property portfolio, especially in that lower bracket, sort of 7 to 9 to million, sort of 7 to a million. You're probably looking at an increase within that price band. So yeah, this is what I mean. Like when we look at, and we have a conversation with our clients, we use different parts of information that come through ABS, RBA, fund managers sort of updates, and they all give us different indicators as to where things are going. The other thing is also, just very quickly, last minute, just want to remind you about diversification, right? So I had a conversation last week with a client where we were talking about diversification. And whilst on the face value, the markets are doing quite well, right? So you look at the ASX, you look at the US market, they're all doing really well. So they're all up for the year. However, like I just explained with Endeavour Group, right? You've got certain areas of the market that don't necessarily perform the same as everybody else. So as a result, diversification is still super important, and it does provide that exposure to different assets that do different things at different points in time. So when you review your portfolio, you'll most likely see that some investments are doing great and some investments are maybe lagging. So and you need to understand why that's happening, because they might be there for a different time in the investment cycle to give you a result, or at least keep your investment elevated during that time. So yeah, look, I hope this kind of helped you to understand, what does the inflation result mean for you, from the beginning of the week. Nothing too crazy. We kind of expected a high inflation, all the inflation numbers prior to that. So if you think June to July, realistically, 2% inflation was not really the inflation that is happening in the real world. So you always need to kind of understand what's happening there. Hopefully that helped. And like I said, this topic couldn't come at any better time. So thanks for jumping on, guys. Looking forward to next week, and I'll see you all next Thursday. See you later. Bye.
Thanks for watching another episode of Wealth Coffee Chat, folks. Make sure you like, subscribe, and turn on your notifications so you never miss a thing when we go live. Improve your portfolio and investing game, folks, with Wealth Coffee Chats live every morning at 8:10 each weekday. Make sure you join us. Previous episodes are also available wherever you get your podcasts, folks, as well as our other podcasts from the 6-Star team here at positivementor.com.au.